Hi friends, I'm back with one more video. So as the slide represent, this is a sort of debit spread for the conservative trader. Alright, so before we actually go on to the sensible, alright, so let me give you few pointers. Okay, so whenever we go for debit spread, these are the few of the bare minimum things what you have to know. One is view of the market. Without the view of the market, be it the debit spread or any strategy, alright, so you cannot sustain in the market in case if you do not have the view of the market. Right or wrong doesn't matter, but you need to have the view of the market. I'm not telling you to predict the market, but you should have the view of the market. At least the probability works. You should have like one or two support and resistance plotted on the chart, and the realistic expectation. The video is all about realistic expectation before, because see, when I started the first slide I said hybrid traders, debit spread for conservative trader. Okay, so when I say conservative trader, it all depends on your expectation for that particular week in terms of profit. All right, and then the other bare minimum thing what you need to know is like the adjustments, and the timing is the key. Okay, you have to do the adjustments. Along with that, the timing of the adjustment is the key. All right guys, so let me exit this, and then what I'll do, I'll take you to sensible. Okay, so let's say we are planning to deploy a debit spread. Usually what we do is like, so this is for the weekly. I'm just deploying the trade for 2nd March guys. Okay, so the market stands at almost like 40,000. So usually what we do is like, usually we go like 2 to 3 strike. See, before this guys, before this I'm not going to discuss about what is debit spread and everything. Okay, I'll be like just telling you what is the debit spread on a very overview, but just in case if you want to know the entire debit spread, just go to my YouTube channel, search for hybrid trader, go to playlist, and then you have 20 to 25 videos on the entire debit spread end-to-end series. I think majority of the people might be knowing this, but just in case if you want to explore, you can just explore all these
Is
videos.
already
All right, all these 25 videos. Okay, let me take you back. So now what I'll do is like, I'll just try to deploy the debit spread. Okay, now what we do, basically we go like 2 to 3 strikes from the current market price. So let's say I'll deploy this one, right, 40,300 buy, and I go by like 500 points. So let's say this is a typical debit spread. All right guys, so this is a typical debit spread. So we bought 40,300 and we add the 500 spread difference, and we sold 40,800. This is just a hypothetical example. Now what is the crux and what is the takeaway from this video is this part guys, this part, right? So whenever you are having more spread, so let's say you bought 40,300 and 40,800 is a sold position, so you have 39% of profit and 11%, right? So when I started the video I said this is for the conservative trader. When I started the video, the first slide, what did I say? I said debit spread for conservative. If you are a conservative trader, so do you think, are you expecting 39% per week, right? This is a gambling sort of mindset. Okay, right? Conservative trader basically have like 1% per week, or at max 2% per week, right? Even 1% is 4% per month, which is almost like 48 to 50% per year. If you are expecting 2% per week, which is like 8% per month, and yearly it is like almost like close to 100%, but still I'll take it as, right, 1% per week or 1.5 or at max 2% per week. So then this is not the trade for us, because whenever you are having the greed of 39% in line to this thing, your loss will also increase. So what I'll try to do is like, how to decrease this loss guys. That's it. I'll not even focus on this profit. I'll try to decrease this loss at the time of deploying the trade. So why should I have this 500 spread difference? So what I'll do, I'll just try to go to 40,700. I'll try to reduce the spread to 400. Right, just keep an eye on these two factors, your maximum profit and maximum loss. And also check this guys, right? If at all you want to get your maximum profit, 2.23%. So bank nifty, yes, your break even is 1.2%, your break even is 1.2%, but bank nifty has to expire like 2.28% from your current market price. So anything behind 2.2%, you'll be getting 39% of the profit. But how many times, how many weeks the bank nifty will give a moment of 2.28%, right? So what I am trying to do is like I'll just try to reduce the gap from 40,800. I'll reduce it to 40,700. Check the difference, guys. Now see, slowly your profit has also reduced and your loss has also reduced. And check this, right? From 2.28 it is like almost like 2%. Again, let me reduce 100 more points. Check this, 23.8%. Slowly your loss is reducing. So we are trying to deploy a trade like a conservative trader. Still 23% is too huge for a conservative trader. Now the moment I've reduced the spread to 300 points, still check this, my break even is like 1.73%. So ideally, whenever we are reducing the spread, your profit is reducing, at the same time your loss is reducing, and also your break even, I mean your IS break even, right? From 2.38%, now it is 1.73%. I'm not, I do not even need this trade also. I'll just reduce it to 500, 200 points. Now check the beauty, friends, right? 1.53%. If bank nifty makes 1.53% per the week, you'll be getting 15%. But I don't need 15%. I'm a conservative trader, right? When I started the slide, I said this is for conservative trader, guys, right? Still I do not need 15%. I'm not focusing on this 15%. I'm just trying to focus on this loss. So slowly my loss is reducing, right? Again, what I'll do, I'll go by 40,400. So finally I can have only 100 points difference, right? If I go like 40,200, this will become credit spread. Okay, let me get, so now this is my sort of debit spread. This is the debit spread of the conservative trader. So we have only 100 point what spread. Check the beauty now. This is almost like 1:2 trade, or else I would say 1:2.1, around 1:2 or 1:21. Now loss is only 775 and the profit is 1725. Still 7% is huge for a conservative trader, right? Guys, stay with me till the end of the video. This video length might increase because I need to explain you, right? So this is my trade, guys. This is my trade. Okay, 7% is still huge. I am ideally focusing on 2%, guys. I'm ideally focusing on this 2% profit, but still okay, because we cannot go more. I mean, if I reduce the spread, so this will convert it to a sort of credit spread. So now what I'll do, now you need to, this is very important. Now the right view of the market is very important. Support and resistance you have to plot. Realistic expectation is, we are at the realistic expectation because my trade is almost like 1:2 risk to reward, and then adjustments and timing is the key, which I'll tell you. So now what I'll try to do, friends, so stay focused, right? Let's say you have deployed this trade. I'm just showing you with one lot so that this example you'll be able to digest it. Now let's say, guys, let's say, right, this vertical line is the market, current market, right? So I'm least bothered when the market goes up, right? If the market is going up, definitely you will be getting with this profit, right? Either 7%, 2%, 3%, 4% based on the expiry, based on where you stand. So I'm not going to tell anything about any adjustments about the when the market goes up, right? You will get into profit. Maximum what you can do is, let me show you, right? The moment the market goes like 1%, let's say tomorrow the market goes 1%, so you will have 668 rupees profit on a capital of 21,000. So let me show you, right? Around 700 rupees profit tomorrow, right? The moment you deploy this trade, divided by, let's say, 21,000, just to show you, right, into 100, which is like almost 3%, guys, right? So tomorrow morning when bank nifty makes a 1%, right, then you will get a potential of 3% profit. So then you can either exit the trade, or what you can do is like you can just convert it to a sort of butterfly. Let me show you that butterfly. How does the butterfly look? But so convert it to butterfly. What will you do? You will just sell one more 40,400 and then you will buy 40,005 and that's it. This is your butterfly. Meaning, yes, now the market stands here. So you will be converting the butterfly only when the market is standing somewhere here, right? 1% here, right? This is one of the adjustments what you will be doing. So there are like a lot of adjustments. I still recommend you to just go and watch all these videos, guys, all these videos wherein we have discussed about end-to-end adjustments about the debit spread. Now let me delete this. Let me get you back to our traditional conservative traders debit spread. Okay, let me zoom this out. So this is my debit spread. Let's say I have deployed this on Thursday. The market stands here. So guys, what I'll do is, like, what did I say? So I need to have two support and two let's say, see, I'm least bothered about the resistance now because this is a sort of call debit spread. So what did I say? That when the market goes up, definitely I'll end up into getting with good profit. All right. So now my only concern is like I have to have two supports plotted. Let's say these are the two supports. Okay. Let's say these are the two supports. All right, guys. This is where your market stands, right? Support 1 and support 2. All right. Now, what did I say? If the market goes up, I'm least bothered. Let's say the next day the market came to your support price, right? Just try to focus. Next day the market, right? You deployed this debit spread as a bullish, but the next day the market came to your support 1, right? So already your view went wrong. All right, your view went wrong because when you deployed this call debit spread, your view was bullish. The next day the market came to your support 1, right? There are only two possibilities, right? Either, right, it is making a sort of reversal candidate. See, two things, right? It can take a U-turn, or else this can breach your support. Two ways. All right, try to focus, guys, try to focus. Even if the video length is increasing, guys, I'm telling you one of the paid content. So two things, right? Either when the market came down, it can take a U-turn because this is a support, right? Support, if support gets respected, market will take a U-turn. If support gets breached, then you should change your view. You should change your adjustment styles and everything. So there are like two things, guys. Before, see, there are only two things, like when the market is trying to take a U-turn, right? So either I can sell it from a call side, we have put side, let's say, right? We have put side and we have CE call side, right? If my view is, yes, the market came down, it might take a U-turn, so then I would sell it from the put side. Simple, guys. I would sell it from the put side because when the market is taking U-turn, I cannot sell it from the call side, guys, because when it takes a U-turn, so my call sell position will be into threat. Let's say this has breached the support, and if it is going to your second support, so then I'll be selling it from the call side. Basic thing. I'm not telling you any rocket science. All right, but now what credit points, what credit I have to capture? So now there is there comes the small calculation. So my loss is 775. This is very important, guys. Okay, 775 divided by 25 is the bank nifty size, so 30 points. So I need to get around 30 points credit to, see, again I'm telling 775 loss, this loss divided by 25. All right, 30 points is what I need to get. So what I can do is, like, I can either get the 30 points from call side or the 30 points from put side, right? Option 1, option 2. All right, guys. So I'll try to show you. So when exactly I'll be going for put side is when it is taking a U-turn from this support. When exactly I'll be going for call side is when this has breached the what do we say, my second support. Guys, give me a second, there is someone at my door. Hey guys, I'm back. There was someone at my door, so let's continue the video. Okay, so what did I say? Yeah, so basically, yeah, so I have to just look out how to get this 30 points. So now I'll show you. First I'll show you this option 1, and then I'll show you option 2, and then I have something called option 3 also, right? First let's discuss about option 1 and option 2. So what is option 1? I'll try to just sell 30 points from call side. Simple guys, right? I'll just try to sell 30 points, right? So I have this one. So what will happen if I sell 30 from my call side? Simple, your trade has become a zero loss on the put side. See, I'll not spend more time on this thing because everything is covered in my end-to-end debit spread. This is just a thought process to show you, right? This is one thing, right? Let's say, what did I say? This was my option 1. So let's say I want to sell from put side. Okay, so now what I'll do, I'll just deselect this. Now what I'll try to do, I'll go to put side. So I'll check right anything which is standing at 30 rupees. So let me take this one, guys. Let me take this one, right? Let me sell this, right? The moment I sell the put, okay, still this has become almost zero, right? Your put side loss has become almost zero with an additional safety of almost like 3.28%. Okay, so what is your view? What did I say? If your view is market can take a U-turn, so then you go for selling the put, right? But you have a cushion of almost another 3.3%, right? Your loss will start when Bank Nifty goes down by 3.28%. But what did I say? When your price action says it might take a U-turn, right? So this is the one adjustments what you can do. If it goes upside, you will still get with some good profit. All right, but still you have a cushion of 3.3%. What if you go with these two things, right? If you are confused, this is the third one. What did I say? I said this is first option from call side, second option from put side. If at all you are confused, so then you can go for the third option, which is basically, right, both your call sell and put sell. But looking at the calculator, we are supposed to collect only 30 points, but here you are collecting 30 plus 30 60. So that's the reason your trade is showing zero. In fact, you'll be getting with some good profit if the trade goes in your favor. So still you have the option of getting 2.2%. But now what I'll try to do is, like, we are trying to target 30 rupees. You can still go with this thing, yeah, that will increase your margin. See, if I deselect these two things, your original margin was 21,000. The moment you are doing this adjustments, right, what is happening here, right, the moment you do this adjustments, what is happening here, your margin has increased and your profit is 2.2%. So what are we trying to do is, guys, we are just trying to do only one thing. What we are doing is we are just deploying a strangle. See, that's what I told, right? Spreads and strangle. If at all you are confident, if at all you are comfortable managing your spreads and strangle, you can manage any strategy. So basically we are trying to deploy a strangle. See, again, let me show you. This is your debit spread. On top of debit spread, you are just deploying a strangle. That's it, guys. Now, the initial plan was to get only 30 points, but we are getting 60. So now what I'll try to do is, like, now what I'll try to do, see, I'll try to just make this to 15 because we are planning to get 30 points. Now what I'll try to do is, like, I'll make it 15. That's it. Right, this is my typical strangle. Now if I select this thing, this is how my trade will become. Yes, my view is bullish. If it goes up, I'll be still getting with almost like 1.5 close to 2%. What did I say? This is for the conservative trader. I have a cushion of almost like 4.63% on the downside, guys. On the downside, my loss is almost zero. 28 rupees is the loss. You got my point? So we started with debit spread, a very conservative debit spread. If at all the market goes up, we did not even discuss about any adjustments because everything is here in my playlist. If at all the market view goes down against your view, this is what we are doing, right? Either we are selling it from the call side, right? If at all I want to sell it from the call side, this is how the trade will become, but it will still show 399. So if I make it to quantity 2, that's it, your loss will become 0 on the put side. All right, if at all you want to sell it from the put side, your loss is still 400, so you have to just increase the quantity to 2 because we have to cover this 30 points. So 14 14 30 points, your loss is almost 0, still you have the potential of 1.2%. If you're combining it with both, so then either you can do like this, or else you can select 30 rupees premium, 30 rupees premium, or else what you can do is like you can select one quantity. That's it. So what I meant to say from this video is we are not doing any rocket science adjustments. We are just deploying a triangle on top of our debit spread. And now this triangle is between, right? So if you want more safety on the put side, what you can do, guys, what you can do is like, see here, let me show you. Let me show you guys, one second. One second. See, you have to just play with this one, right? Just in case if I go like 37,700, you see this, you have more safety, you have 5.59% safety on the put side, and you have 3 point. So this all depends on the view. So if I select this thing, so you get more safety. Now initially it was like 4.4, now you are getting a safety of 5.54%. You can just play with this triangle. So just in case if you want like more safety on the call side, so you all know, right, you have to just play with this thing. That's it. So now I'll just leave this activity to use. It's 38,300. Now your profit will increase slowly. Just check this, right? See, now you have less safety on the put side, but you are getting more range on the call side. So you have to just play with this, what do we say, adjustments. Even if I deselect this thing, so now what you can do is like you can just play with this thing, right? You can just uh, increase the quantity, right? You can just what do we say, see, now if you want more safety on the call side, right, this is what I have done, right? So now your profit has increased to 2.1%. You have less safety on the put side. So end of the day, what did I say? End of the day, view of the market is must, support and resistance is must, your realistic expectation, adjustments, right, whatever we are saying, and the timing is the key. Now you have to decide when exactly you want to do the adjustments. All right, guys, thank you guys, thank you for watching my video. So just in case if you want to join my paid mentorship program, you have all the details in the below description, right? If you like my video, and also please subscribe my YouTube channel. Also please share with your friends. All right, thank you.
The first step towards achieving your dreams is having the right coach. Get the best education with Hybrid Trader and make your options, strategies, and swing trading dreams come true. Download the app now.